Hey, this is Brant from TradeGuild.net. It is 1:30 in the morning, the 28th. So we're looking at the market for the 27th. I'm just an insomniac. So today, or the 27th, what we had, the manufacturing report came out. Came out at 1.3%, which was stronger than anticipated. It was anticipated to come in at 0%. So the market rallied. That was in the face of the third straight day of gains in oil. Energy Department released a crude oil report, and inventories had an unexpected drop. So oil was up because of that. Also, tropical storm, which will be Hurricane Gustav, apparently, which is slated to hit Louisiana by Monday. So they're already evacuating the oil rigs out in the Gulf of Mexico. So that's going to interrupt production. Of course, that's going to drive oil prices up further. So we had the fifth consecutive day of record low volume today in the market. Today was the lowest day of the year. We had 820 million shares traded on the New York Stock Exchange. Very, very low volume. So what's that tell us? In a bear market, it doesn't tell us anything. The burden of proof really is on the bulls. The bulls need to move this market higher, and they need to move it on volume. In a bear market, prices can fall without volume. So it doesn't tell us anything except possibly we're in a consolidation. However, there are some interesting developments. There's a couple sectors that are looking really hot right now. Very interestingly, retail. So I'm going to pull up retail for you real quick. RTH, which is the retail holders ETF. And basically what we have here is one of these flags that we've been talking about over here. So this is a consolidation pattern. Basically, we got to move up, and then it consolidates the gains, and then we expect to see another move up higher. Again, what I told you the other day about consolidation patterns, we look for volume declining on that, and we've seen that in the market. Everywhere we look, we see declining volume. So I don't know if this is particularly anything special, but it does look pretty intriguing. So retailers across the board look pretty good. Another one, semiconductors, semis. So let's pull up SMH, which is Semi Holders ETF. Now this one is not so much a flag, but what it is it had a nice run up early August, and it's pulled back about 60%. So it's a pretty deep pullback, and it's basically pulled back to a support level back in this area over here. So last little candle is kind of a little bit of a doji, which is a loss of downside momentum, which obviously opens up the door to a upside reversal. So semiconductors also looking interesting. I'm going to show you a lot of these charts in just a minute, and I'm going to pull up one more, which is software, and I'm going to use the Dow Jones Software Index, and the symbol for that is DJ USSW. Okay, again, so if you've been watching the videos, you're probably going to notice a flag here. There's that flagpole again. There's the flag. Remember, with flags, this is a what you'd call a bull flag. So it's a bullish formation, and the bull flag. Always remember that the flagpole goes up, and the flag always consolidates against the trend. That means it's going to consolidate down. If it consolidates up, the pattern is not valid. So even though prices are falling, that's good. Again, look for volume falling on that. So that's what we see over here in the software index. So we're going to take a look at some names real quick. If you guys want to pause the video and you can take a faster look at them, I'm just going to run through them real quick. ORCL, which is Oracle. Okay, you see it again, flag pattern there. Adobe, ADBE. Again, another flag pattern over here. ADSK, which is Autodesk, and this is a little bit more tricky to see, but basically you do have a big rise up here, and then you have this flag over here, and again the volume coming down over there. So Autodesk, LCRX, oh, I'm sorry, LRCX, and here's LRCX. Again, another flag over here. Here's our flagpole. Here's our flag over here, consolidating against the trend. There's the volume declining. Intel, INTC is the ticker for Intel. And again, not all flags look alike, but basically here we go. And our flag consolidating against the trend, volume declining again. You get in the picture here. Here's some retailers. Remember I told you retailers. KSS. I went ahead and I bought calls, which are long contracts in KSS already. I think I've got September 50 contracts on these. So here's a big flag in KSS. Another one is Ralph Lauren, RL. Polo. So there's a flag in Polo. A little bit more of a triangle actually, but that's okay. So you can see that one over here, which would, instead of being called a bull flag, that'd be called a bull pennant. Looks like a pennant, you know, like you see at a college football game, you know, rah rah go team. One other one, LTD. Here's LTD. I also bought calls on this one. I think this looks really, really hot, this stock. Huge volume over here on the advance, and here's that flag consolidating against the trend. Volume's coming down on that. I just love the way this chart looks. So I bought a bunch of September. I think I got September 20 calls on this one. So I got about 4 weeks on that contract. So I really like that. Another chart pattern which looks really nice to me right now is the CHS Chico's, another retail. Not so much a flag, but look what's going on here. It's bottomed out, had some nice volume over here on a rise, went ahead and pulled back, did not make a new low, and then it rose up again here on real good volume. The only reason there's big volume in that is, you know, institutional money's flowing into this. So Chico's, and this one's optional too, so you can go ahead and get contracts on that. But I looked at those. I think they're a little bit expensive. If you've been following the blog and if you're part of my contributors letter, you know that we've been looking at refiners, and TSO is one I've been buying since late July, early August. TSO had just an amazing day today, up 11%. So these refiners, you know, as oil goes down, the refiners are going to go up. Obviously, their input cost goes down as oil goes down because they're taking oil and making gasoline. So 11% on TSO today. Another one we've been pretty hot and heavy on is WNR, and one of the guys from the site actually recommended this one. And also, and notice the flag on this one, and here's a flag that's already started to break out, so you can see what it's supposed to look like when it breaks out. We had the nice volume on the flagpole, the volume consolidating on the pullback that, you know, pulls back against the trend, and when the breakout occurs, you can see volume picking up again. Real quick, I just want to show you what pretty much needs to happen for this market to move higher. We're going to take a look at SPY, which is the ETF for the S&P 500, the spiders. That's a daily chart. We are going to look at a 60-minute chart. Let me back out a little bit and pull up a trend line here. So here's our 60-minute trend line, and this is what we saw today. I was actually, well, I'm not going to tell you what I said in the letter until until it happens. But anyway, basically what needs to happen is that we need to see a breakout on good volume above this downtrend line. Because what's still going on here, until we see this breakout above this, and this also, by the way, is a flag of sorts. You know, basically, if I had another trend line here, we'd see the flag. But if I go ahead and I look at a daily chart of this, let me get rid of the marker. If I look at a daily chart, we've got another problem here. We've got another kind of dilemma, and that is if I draw this, we have a much bigger, and let me show you a 2-day chart. We have a much bigger flag that may override all this, and this is a bear flag. So there it is. There's the flagpole. Here's the flag consolidating against the trend. There is the declining volume. This is a very bearish formation, and it could break down here. I haven't done any 3C analysis on this. I've kind of had my hands dirty tonight doing some stuff. The bottom line is, you know, this is going to go one of two ways. It's either going to break out above that trend line that I showed you on the 60-minute chart, or this pattern is going to fail, and if it fails, this market's going a lot lower. So slide on by the website, tradeguild.net, trade with a hyphen, guild.net, and I'll update the 3C analysis when I get a chance. Thanks for listening. Brant from tradeguild.net.